Thanks for your patience, traders and investors. We're back. I'm Brianna Valesky here with Joel L. Kahn, and you're listening to Benzinga's Pre-Market Prep. We've got Cate Long on the line. She's a municipal bonds expert, financial blogger, and the founder of Puerto Rico Clearinghouse. Cate, thanks for joining us this morning.
Thanks, guys. Good to be here.
So, of course, we have to touch on the big news of the day post FOMC meeting yesterday, taking out patience, opening up the door for a possible rate hike in June. What does this do for the muni bonds market?
Munis didn't really rally. They kind of just stayed flat. They often they move with treasuries, but not at the same time, not in the same frequency usually. So we'll see some, maybe going forward. It's really a supply-driven market as much as tap to treasuries. So.
Okay, so there's a heavy supply of new municipal bonds coming to the market ahead of a possible rate hike now. There's still, no one thinks interest rates are going up really high if they ever do go up. So what about the supply? Is it being met? Is there sufficient demand, or are we going to run into little problems here?
Yeah, there's pretty strong demand for it. What happens is a lot of the issuers, they're not issuing what we call new money bonds, which is to raise money to build projects. A lot of this new issuance is refunding bonds, where they're taking old bonds that are outstanding at higher interest rates and reissuing them at lower interest rates. So there's some demand, but investors always want the best rates, the highest rates they can get. So there's a little tension in the market, but there is plenty of demand for this paper that's coming.
Right, and with low inflation, not having tax free, not a bad investment going forward.
It's great. It's munis, if you have a lot of income to shelter from taxes, they're a place a lot of people like to put this conservative side of their portfolio.
Okay, so there's a couple states that are having some pension problems. The first one being Illinois, and from your note here, pension problem, and it's persisting. And you also have some elections coming up in Chicago. Here, let's talk about the implications for the muni bond market.
Yeah, this is becoming a bigger and bigger story because Illinois has had fiscal problems for a very long time, and I know you guys kind of keep an eye on it generally. But Illinois and Chicago both do not collect enough taxes to pay all their expenses. And both have kind of papered over the shortfall by issuing debt, issuing bonds. And they kind of run out of that, capacity to issue at rates that are reasonable. And both have underfunded their pension system. So that's like the same as individuals if we didn't fund our 401ks. But they have a legal responsibility to do this. So more and more they're going to have to start making decisions whether to fund current services for people like healthcare and roads and education, or fund these pension systems that are a big problem.
And you would think like the bumps in the markets would kind of help these things out as far as the funding. Has that not really been a factor for Illinois or New Jersey?
Not so much. I just checked the Illinois, the bond price for Illinois as of last night, and basically a 10-year bond in Illinois is trading around 3.5%, and the Treasury this morning the U.S. Treasury 10-year was trading around 1.9%. So you can see that they have to pay a lot more for their debt right now. It's considered much riskier, say, than the U.S. Treasury. New Jersey has a little bit better situation. They have a lot of very high-income people in New Jersey because of Wall Street and other industries who tend to buy their debt. So their borrowing costs are not as high as Illinois, but they're higher than most of the rest of the country.
Cate, I was watching a segment of you on Al Jazeera yesterday, and I think you mentioned that a lot of the issues in Illinois are stemming from just an extremely corrupt government. I want to say you said that 4 out of the 5 last governors are now in jail. Did I hear that correctly?
No, it was 4 of the 8 last governors.
Okay,
so half
better,
of Illinois governors have gone to prison. But that's still pretty astonishing number, I think, for any state.
Wow. Wow, that is a
That's
really high
yeah.
number. So let's move on to Puerto Rico. Obviously, that's going to have some implications on the U.S. markets, and they passed a new gas tax and working on overall tax reform. They've been doing that for a while. Moody says the electrical utility will default on July 1st. I mean, that could cause some problems over here.
So there's some question about Moody's analysis. They have essentially the electric utility has the money to pay that July 1 coupon and the principal that they owe. Moody's said they won't do it because they'll withhold it to make capital improvements. And I disagree with Moody's on that. I think it's more likely they'll pay it. They have a lot of negotiations that they're doing with bond insurers and hedge funds that own that paper and mutual funds. So it's a big question mark. Eventually, they will restructure the electric utility. I'm not sure that they'll do it around July 1, though. And then the tax reform overall for Puerto Rico is there's a big push by the governor to replace the sales tax with the value-added tax, like they have in Europe and many parts, around the world. What they're talking about now is raising the rate from 7%, the sales tax rate, to 16%. I think that's just kind of a straw man that he's put out there, and eventually the rate they'll bring it a rate around 10 to 12%, which will stabilize the finances of the island tremendously.
Kate, I know you mentioned Chicago already, but I kind of want to jump into it. The bond market, watching that city elections really closely. Can you explain a little further into that?
Yeah, so Rahm Emanuel, the current mayor of Chicago, ended up in a runoff with a guy that's serves on the county commission, Cook County Commission, Jay Garcia, and it's a question mark whether Garcia would have the power to get some of the expenses in line for the school board and for the Chicago government, because Chicago now is rated triple B, which is just one step above junk. It's the lowest rated major city in America. It's not Detroit. We've talked about that before. That the economy is still very vibrant there, but they have a lot of structural issues, and they need to raise taxes or they need to cut expenses. They need to do something. So one of these two guys in this mayor's runoff is going to win and going to have to do it. So the bond market's watching who it's going to be.
Speaking of Detroit, you and I had spoken, I believe it was last week, about Wayne County, which is the county that includes Detroit and a lot of the surrounding cities also being downgraded. Can you tell us a little bit about that?
That's interesting, Brianna, because, in the same context, we talked about how corrupt Wayne County was. And
Right.
the guy that was running it for ages, Ficano, is one of the more corrupt political figures in America. So you see almost over and over this pattern of corrupt local officials, very messed up fiscal situation in these places, and then whether they lead to bond defaults or not is a question mark. But this is a problem, and I think credit analysts and people in the bond market need to start looking more closely at corruption in places, and I think taxpayers probably want to do it too, just because there's nothing worse than paying high taxes and getting crummy services.
Mm-hmm.
So.
And then the last one, I know you also briefly kind of mentioned it too, is New Jersey. Can you tell us a little bit more about the situation going on there right now?
So New Jersey's facing the same thing, where the taxes are very high already, just as like Illinois. People are moving out. The government has not really changed size. They haven't reduced the number of employees, state employees. The credit rating agencies are getting antsy about the level of debt, and pension problems. New Jersey, like Illinois, has a massive pension problem where they've underfunded these systems for a very long time, and it's just been kind of hidden off the books, so people didn't pay attention. But over the last 3 or 4 years since the financial crisis, this has become increasingly important, and important to bondholders, because in a seniority structure, it's a question whether pensions are ahead of bonds if there was, tight money, inability to pay. So it's a big problem for bondholders, big problem for taxpayers and residents of these places.
All right, one final question for you, and this is the $64,000 question here. Is the Fed going to raise interest rates this year?
Possibly. There's, like we talked about in December, there's all these forces that are pushing in different ways. The Fed yesterday lowered the unemployment level that they'll use as a trigger to 5.2%. So will we meet that? I don't know. We have a lot of slowing things in the economy, and then we have negative yields in Europe, sovereign yields. So there's a strong dollar issue between European, interest rates and U.S. interest rates. So it's not likely, in my view, they'll raise in June unless the economy really strongly picks up, which I don't see. September possible, and then beyond that, it's a question mark.
Okay, we've been on the line with Cate Long. She's a financial blogger and founder of the Puerto Rico Clearinghouse. She joins us every few months to discuss the muni bond market and interest rate. Great input, Cate. Thank you very much. We'll talk to you again soon.
Thanks, Kate.
Excellent. Thanks, you guys. Bye-bye.